Wasser publishes seconds ago, formerly with Rand Corporation and now with Bloomberg Intelligence. This was Chris Kennedy. And she's talking, I love this phrase, for Paul, the when and how. We've moved in Iran to like do this, do this, do this. It's all now when and how to Becca Wasser.
Yeah, I'm not sure where we go from here. A lot of strong rhetoric from both sides over the last couple of days.
Or just in the last couple of hours as well. I mean, folks, yesterday was one of the most nuts days I've seen in umpteen years, and today's not much different. I mean, you know, the news flow and opinion from people. We'll try to bring you as much of that as we can. Patrick Fruzzetti with us right now, Rose Advisors. What's the panic level of your clients? I mean, what I love about you, you're actually out doing lunch. What's the sweat level at lunch?
Good question. I would say panic level is not high, but there is definitely a level of worry that exists. And I think part of it is, you know, what's going to happen in the broader world? How long is the war going to go on? They often, you know, the folks that I deal with on a day-to-day basis, you know, they worry about their kids. They worry about the next generation. You know, we talk about growth in the economy and growth in earnings, but it's been a jobless growth, right, over the past year. And so when they think about those things, they say, well, you know, is the next generation or my grandkids going to be able to get a job? Those are the things that they worry about. So not necessarily worrying about, you know, paying the bills, so to speak, but there is a level of anxiety that exists.
So what's the portfolio response to that? Is it, staying the course on diversification? What's the story there?
Yeah, I think so. You know, we're in a midterm election year. And so in the fourth quarter of last year, and I'd spoken about this before, is, you know, there was a bit of rotation on our end to prepare for that. Midterm election years tend to be the most volatile. Doesn't mean you end up down. It just means they tend to be the most volatile. So we came into this year positioned somewhat defensively, at least on the margin. And so we were able to use that, in late March and early April to rotate a bit on the margin. But I think staying the course, yes. I think, you know, when you put together an investment plan, you want to stick with it. You don't want to change the narrative all of a sudden, even though, again, there are definitely a lot of variables in the market today.
I read a big fancy article yesterday on TDFs, which is, I guess, target defined something in retirement planning. And their returns are pretty sweet. They're like 9-10% return, depending on what the firm is, et cetera, low fees. You know, there's all these advantages in that. But they're not NVIDIA going up 90%. Is there an angst that people aren't involved in all the stocks Paul owns?
So in terms of FOMO, I wouldn't say.
FOMO's still there?
I would say there is some FOMO, but I would say overall, because of the broader concerns, I think just geopolitically, et cetera, I think they're okay for now, you know, not having all of that exposure and not, you know, outperforming the market. Because again, the experience in the first 3 months of the year was very different than April.
I got to explain this because Henry is listening. Henry's 10 years old.
Okay.
His mother forces Henry to listen to the show.
That's too bad.
10 years old. Henry, FOMO is not something from Finding Nemo. Fear of missing out is what that is.
Yep,
I got that right? Thank you.
No thanks.
Thank you, Henry, for listening.
Exactly. So, Patrick, alternative investments, how's that discussion go with your clients? Because I'm surprised when some of the registered investment advisors that I talk to at various places, it's a much higher allocation than I would have thought. How do you guys think about it?
So we do have an allocation to alternatives. I include gold within that allocation, so we have some exposure there. We do not have exposure to, private credit. So there are things around that have always concerned me, at least over the past few years. So, you know, typically alternatives for us mean things that you can't really get elsewhere. So income-producing real estate, I think that's generally, a good diversifier in the alternative space. We have exposure to farmland fund, things like that I think are true diversifiers.
Yep.
I think that's important to have in the portfolio. So from a percentage basis, though, if that's where you're getting, I think sort of low double digits, sort of the 10 to 15% range makes sense.
What's the number one point you try to make to your clients today if you're going to your lunch today?
Just stay the course with what we've what we've put together coming into this year, I do not think volatility is over. We are still in a midterm election year. That fact has not changed. And so, and it's, as Yogi Berra said, it's tough to make predictions, especially about the future. So I'm not trying to make predictions, but I think that, when we look out the rest of this year, I do think we're going to see some volatility because we haven't seen the inflation, especially the energy inflation, flow through the valuations yet, flow through the the margins. And so I think we're going to see that in the coming months.
We're going to leave it there. I like how you bring up the election. And Paul, we haven't mentioned tariffs since time began.
No, you're exactly right.
And they're all in there. They're all in Mexico. They're in Canada. They're here. I mean, the thing I did in Toronto last week with Jimmy Jean of Desjardins of Montreal, he said there's no other topic but tariffs in Quebec.
I'm sure.
Because of aluminum. But there's all these things we're not even talking about in this crazy news flow. Futures up 34. Patrick, thank you so much. Patrick Fruzzetti at Rose Advisors. Futures